You're watching Stockwatch this week. I'm Ndawling Lechela, and joining me to unpack your stock-related questions today via Zoom is Nader from Benguela Global Fund Managers and Gary Booysen from Rand Swiss. So be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Gents, thanks so much for joining us this afternoon. So we've had a fairly mixed week when it comes to trade. Inflation prints out from the US, Beijing and China renewing their trade truce. And over the last 2 days, Middle East tensions have been, hogging headlines, and attacks overnight really weighing on sentiment. Just your analysis of the week that was when it comes to trade, Gary.
Well, yeah, like you say, it's been a busy week, and I think the tensions were rising, and everyone was concerned when we came into the week around the US-China deal, and we're closing the week with a whole different geopolitical problems. So, looking at it, there were kind of almost early warning signs for what happened last night as well. We saw, families, obviously, of US service personnel leaving the region at least, and we saw the oil price starting to move yesterday afternoon. Obviously, with the attacks overnight, that's where we really started to see the jump. So we're kind of heading towards that $70 barrel handle on Brent crude oil, and of course, right now we're trading above 75. So the market did, to an extent, preempt that there was something going to happen in the Middle East, and yes, that obviously has wide-ranging ramifications, across the globe. The potential supply chain disruptions are one of them. Specifically around going through the Suez Canal, for example. So it changes the commodity picture. It changes a lot in the underlying market. And while we might have had, the deal done, with US and China, when I say the deal done, Trump obviously announced it on Truth Social, saying that the deal was done, but there was still a lot of mechanics that have to be kind of decided behind that. Everything from, the IP sharing that would need to be done by companies that were going to access, let's say, rare earth minerals in China as well. So, it's been a week of big international headlines that have, I suppose, just swung sentiment all over the place, and it's been a lot of moving parts. A lot is happening, and people reacting, and volatility starting to increase again. We saw it in our local currency today, all the way out to 1807. We were at 1770 2 days ago, all the way back now to kind of 1790. So prices are moving aggressively, and that really has been kind of what's been going on for the last 2-3 days.
I'm just happy that, for once, Trump is not hogging the headlines about trade and trade deals and tariffs, etc., etc. Grant, let's get your take on the week that was. As Gary mentioned, we are seeing volatility still remaining the name of the game. The Rand literally trading above 18 to the dollar at one point today.
Well, I think Gary summed up the noise well. And of course, this kind of event is always interesting. The market has a habit of trying to move quickly past these kind of events. But you did see a bit of a flight to safety and some dollar strength, and long end rates coming down. You haven't seen that in a while, because the dollar's been one-way traffic on the weakening side for a while. So I thought that was interesting. And we saw gold it moved, but it was fairly muted given the levels it's already at. Most of the sensitivity came through in the oil and the currencies, but the real question is, how sustainable is this, and what happens here? So Israel has said this is not a one-day event. They're not just hitting, striking once. There's going to be, it's a pattern. So they've got days of strikes. They've got a whole target list. You're going to see then the retaliation. And I think the last memory we had of this not that long ago was, there was a retaliation. It was all okay. The defense was fine, and nothing, and then it went quiet. I think that's what the market will try and price in again. But if they're wrong, and if something does escalate here, this could become quite messy. So there's a lot of noise, I think, and the market's reaction is fairly muted, probably rightfully so. But I think the outlier risk is growing, and it's a lot bigger than people maybe appreciate at this point.
I'm sure central bankers woke up so worried today, considering the kind of impact these high oil prices, if sustained, could have on inflation, right, Gary?
No, of course. Oil is an input into just about everything. Anything you've got to transport is going to increase in price because you're going to need to use. As much as we'd love to be a battery and nuclear and energy society, we just aren't at this stage. So, of course, it's going to have incredible inflationary impact. I think to Grant's point as well. I mean, the market reaction, given what the tail risk is here, I think has been very muted. And I think there could potentially be higher concerns, but it's almost a theme that we've seen throughout the year as well. The effect of the Trump tariffs, and I know you don't want to talk about Trump tariffs, but the effect of the Trump tariffs, even with the kind of the higher level that has been set, even though it's not the crazy reciprocal tariffs. And remember, we've still got the 8th of July coming up as well. So we might have Trump back in the headlines there. This is going to have a significant, wide-ranging impact, and yet we've got the S&P 500 just off all-time highs. The market is looking at this, trying to look through it. I mean, Wall Street is calling it the taco trade.
Yeah.
Trump always pickens out, but I think there's a danger in assuming everything is always going to be perfectly fine, and some of the companies that you're looking at when you're investing in equities, there could be pressure on profits. I mean, economic growth could constrain, and some of the multiples that we're looking at are incredibly high at the moment. And if you do see an unwind there, having some protection in the portfolio, diversifying across asset classes, I think it's important. It's not just about going, markets always go up. I mean, this is, we can have long periods where markets underperform as well. And I think you do need to be cautious around here. And as Ron says, I think probably the right reaction is to wait and see. When you see attacks like we've seen last night, let's see what the response is like. Last time, Iran doesn't want to be pulled into World War III. I mean, this is something that we think probably will be muted, but as Grant says, the risks are growing, and I think you need to be cognizant of that. Not if you're running a straight equity portfolio because your mandate is to buy equities, but to kind of understand your asset allocation at this stage is important.
And just quickly around Trump and tariffs, I know I said I don't want to talk about this, but it was interesting to see some of this week's inflation prints. U.S. Consumer inflation ticking up slightly to 2.4%. We got softer than expected PPI numbers as well. Why aren't we seeing, the impact of tariffs coming through? It is coming through, but slightly so. Should we just wait because we got the pause as well during the period? Grant?
I think it's a couple of factors. One being the fact that the full effect could still well be to come. So, I think companies have held back. No one wants to rush out and start raising prices because then you suddenly, if you're the first one to raise prices, your competitors can gain market share, and then suddenly the tariffs fall again. So I think people have been reluctant to pass on all the costs. I think the cost absorption of tariffs has gone through the supply chain. It's not just at the consumer end. So the guys selling the product, you saw PPI in China is negative. You've seen, the guys buying it are absorbing some in their costs. And so only a little bit is fed through to the consumer.
Okay.
So I don't think we're seeing the full picture. But I think the next few months will tell the full story. But what I also think is that it won't be as bad as it looked initially because tariffs have tapered quite significantly.
All right, let's look at Sasol. There's a question here on the counter just following the surge in oil prices. The viewer is saying there's a lot of different opinions on the counter and asking whether Sasol is a buy for the long term. I'm looking at the chart now, and it's up 7.5%. Grant?
So on the long-term picture, it is not a stock that I would feel comfortable buying. I think in the low 60s, that question was asked on the show, and I thought it was worth the risk reward made sense there. Given where it's trading now back toward 100, the thing is the uncertain future of this company has me concerned. The requirements to decarbonize and all those commitments around emissions. There's a lot of capex required. There's a lot of unknowns in this field. I would not put this under my pillow and go to sleep with a 10-year view. I just wouldn't. I think you can buy it, but then you need to be more active and almost like a trading perspective.
Yeah.
I'd be cautious. I think the easy money has already been made unless oil explodes higher from here. Just more like a tactical position if you really want to play there. Otherwise, I would be conservative in positioning in this one.
It really hasn't been smooth sailing for Sasol, Grant. And following the capital markets day, I remember Moody's even downgraded its outlook from stable to negative. You seem to agree, Gary. I saw you nodding while Grant was talking.
Yeah, I do agree. So I think that's the question. Is this one to Grant answered the question really well? Is this one to buy for the long term? And I think that's a dangerous, because if you look at just the SG and the carbon footprint of Sasol, it's incredible. I mean, it's difficult to see how this company is around in the form that it is today in 50 years' time, in 30 years' time. It's going to be a very, very different business. So, but in terms of the underlying valuation, I mean, if I look at kind of just consensus, where we're sitting on consensus, looking at 157 Rand a share, a lot of the move that we're seeing today, so that's 7% run, that's coming obviously from the surge in the oil price. It does also, it's obviously quite sensitive to the currency movements as well. So I think shorter term, though, there's definitely a value story around this. Now, you mentioned the capital markets day. I mean, when last did Sasol do a capital markets day? It was a long time ago. You get the sense that from the issues that they've had around Lake Charles, the real challenges that this business has had from a management perspective and from an operational perspective, the ship it's a big ship and it's turning slowly, but it is turning, and it takes very little for investors to become excited about it. And with consensus expectations, kind of mid 150s, and a stock price that's still trading sub 100, that's interesting. But as I couldn't agree more with Grant, a tactical play. I wouldn't buy and forget about Sasol. Okay. This is something that I think there is an opportunity in now. But you've got to manage it actively. You've got to be careful and look for that exit when the excitement comes. And I think you will see catalysts like, conflict in the Middle East. There's things that can get Sasol share price moving. And I mean, you can easily see it probably shoot through that 150 Rand level. But at that stage, you'll want to be lightning. It's not a Berkshire Hathaway type stock. It's probably not something that Warren Buffett would be looking at.
Question here, asking whether the investment case for Boeing still holds. The group has been marred by tons of bad news, safety concerns back under the spotlight following the recent plane crash in India. We've had concerns over the 737 MAX model, also embroiled in a lot of those safety concerns and issues as well. There's also that strike that hit the company last year in the US. I don't know, man. Is this a company you follow, Gary?
It is a company I follow. It's also a company I own. Oh. So, looking at Boeing, I mean, thank you for listing all of the terrible things that have happened to Boeing recently. I don't know if you mentioned that they also left people on the International Space Station. So it's it's a company obviously that, again, it is very much a turnaround story. It's one of the only companies that we look at that haven't grown. So it's one of the metrics that we look at when constructing a portfolio will be, has the company grown revenue over the last 5 years? Have they managed to have compound annual revenue growth? And Boeing hasn't. I mean, Boeing has been in a very bad position, but there has been a management change at Boeing. We now have Trump as a salesperson for Boeing. Every time he seems to have a meeting around tariffs, he seems to come out with a new deal for more Boeing deliveries. And the fact is that given the unique position Boeing has globally, I mean, Airbus and Boeing are essentially a duopoly. Yeah. There's a real moat around these two businesses, and they will be supplying aircrafts, and it's really a question of, can they get their manufacturing process fixed, and is there the will to do it, and is the management team capable of doing it? And I think they are. So like I said, we added Boeing probably about it was almost 8-9 months ago, and really it was a replacement for Lockheed Martin in our portfolios. Lockheed Martin looking a little bit too extended, Boeing looking a little bit more like a value play. And as I said, we've gone through a lot of bad news on Boeing. Of course, we had the unfortunate announcements last night, but the share price reaction was muted because looking through it, these are issues that the market is aware of, and I get the sense that if it's in the press, it's in the price. When you look at the bad headlines that Boeing has had, investors in Boeing are well aware of this. Now, I think the upside, the margin of safety on this, if they are only to get slightly worse than they are now, is significant. And it is a very unique company globally. Obviously, they also have a defense contract, as well as their main airline business. So I think from a valuation perspective, there's a good argument to have Boeing in a portfolio, and yeah, so we hold it.
All right. So, Grant, do you hold either Airbus or Boeing?
No, I have to say we don't, and I think there's enough question marks around a pattern of poor corporate governance and safety at Boeing that would mean we wouldn't own that. There might be a turnaround story there. I'm not saying there isn't if they get it right, but I prefer Airbus. I think it's a better quality business. It's run a lot better culturally as well, better governance, and that would probably be the one that we would lean into. Having said that, I think both of these companies, with the demand globally for defense spending that's going to continue to grow, these guys have a very strong defense and aerospace component to their business, not just commercial airlines. And so they both probably have a tailwind of demand that will see them through as they are duopoly for now. China's coming at for their market share, but they're not yet at that space. So I think they're a good place to have a look. But of the two, I would lean into aerospace.
Okay.
Airbus.
Airbus. All right. Do you hold Airbus, Gary? Because you mentioned that you hold Boeing.
No, we just hold Boeing at this stage. So,
okay.
Yeah, just Boeing.
Okay, let's move over to Cartrack owner Karooooo. The viewer asking to explain the rapid moves we've been seeing in the share price. I think yesterday it closed about 16% lower, and we've seen a recovery today, trading up 3.86%. Is this on the back of CEO Zak Calisto selling some of his shares, Gary?
I don't know what the initial move is. I can't see anything kind of on the headlines around it. But yeah, Grant, you want to take it?
Yeah.
Okay.
No, just to say that he's selling down some of his shares, and so that's the source of the stock falling. It's just a placement into the market, but the stock has run so hard that you can expect this. It's not going to place at current prices because the stock is up. I don't know what it is, 50% for the year or something ridiculous. It's been an absolute rocket. So, but what I would say is this placement of shares, this discount, is actually potentially a good opportunity for an entry into a really good business that has historically been incredibly illiquid and has kept a lot of investors out of the stock. And so if he's placing more and more of his shareholding into the market, that's actually long-term a positive for Karooooo.
And is this a company you see value in, Gary, a company that you would pick up?
Yeah, so we don't hold it at this stage, but I mean, it is a high quality, software as a service business. Obviously Cartrack, subscription growth model, high margins. I mean, you're talking kind of like 26 to 30%. So and also kind of expanding globally as well. So and a global business. So I think definitely an interesting one. As I said, maybe a little bit concerned just with the speed of the run up that we've seen at the moment. So as Grant said, tightly held, so maybe this is an entry point, but at this stage we're kind of sitting on the sidelines. If we miss out, that's fine. Maybe just need to see the valuation a little bit lower than it is at the moment.
Okay, let's move over to the telcos players. Grant, what's your 1 year view on Telecom? The group was out with numbers this week. Earnings seem to be recovering nicely. The mobile unit also, recovering really well. And cash coming through from SwiftNet. I think they also declared special dividend, right?
Yeah, I mean, I think Telecom has been a remarkably good story. They're actually executing this turnaround pretty well. I've been surprised and quite impressed with what they're doing. I mean, the top line growth is still muted, but I think they're doing a good job, and I don't think you're overpaying there. I think they're executing well. We don't hold it, but you probably still could see some growth there. And this sector generally is still fairly cheap. With a 12-month view, you'll probably be okay on Telecom. I'm not very close to the story, but I do think what they've done so far has been quite notable.
So a good turnaround story there, Gary. Are you seeing value in Telecom, and I guess trading cheaper against its rivals, competitors, Vodacom and MTN?
Yeah, I think that's been a theme that's been around for a while. So Telkom, almost was unfairly punished compared to MTN and Vodacom. So we don't hold Telkom at the moment, but we have held Telkom in the past, and around like it was kind of mid-20s, low-20s, and it performed well for us. And as Grant says, I think Telkom is often maybe a little bit of a misunderstood business. It executes maybe a lot better than people expect. I've heard people also raising concerns about the SwiftNet deal, saying, are you giving up your almost your leverage down the line if you sell out of your towers business? I don't think so. It's kind of a business model that operates across the world, and it's really what these telcos do with their subscribers down the line. So, obviously voice revenue is dropping, data revenue is escalating, but if you're looking at a telco, you've got to understand, are you going to be using like a mobile phone more in 5 to 10 years than you are now? And how will you be engaging with that? And how will these companies adapt to deliver that? And I think that's really the exciting part of telcos for us. Of course, I've got, obviously a fiber services business as well inside Telecom. But for us in the sector at the moment, we're currently holding MTN. It also has performed very well. Obviously it does come with additional risks given the scope of its footprint, but we see it as an entry point into frontier markets, into Africa. The kind of challenges that it's had in Nigeria in the past, I think that risk has reduced significantly since the listing on the Nigerian Stock Exchange as well. Getting the Nigerian people to also almost have skin in the game. They've become shareholders as well. So maybe a little bit less politically palatable for the NCC to come out and you have these enormous fines on what was a foreign business, which is now also a Nigerian business. So it's for us MTN. Telcos long term, I think you've got to think about them as more than just these utilities that supply, phone calls, and they need to be more than that. But I think they are also perfectly positioned to be that as we see the development of AI and as data becomes more and more required.
All right, we seem to be running out of time, so I'm going to get into your stock picks. Grant, I'll start with you. Where are you seeing opportunity at the moment?
So I'm looking at Booz Allen Holdings, which is it's a 100-year-old plus consulting business in the US. They consult basically mainly technology consulting and contracting. A lot of that is to the US government. A lot of it is in defense. A lot of it's AI and cybersecurity related. So I think they're very well positioned for those growth areas. Having said that, the stock's been punished quite hard in the face of Doge and government spending cuts. And I think that's where the opportunity has come in, because I don't think Doge has been that much of a success. There might be some cutbacks in the US. I think they're not going to be as big as people think. The demand for AI, technology consulting is going to only get bigger from here. And so I think you're getting a very cheap entry point into what has a long history of being a very good business.
Okay, and where are you seeing opportunity, Gary?
Well, I don't know if I am seeing opportunity. so that's why I'm actually going with gold as my stock pick for today. Okay. And again, we were talking earlier about the requirement to, just diversify a portfolio properly. I mean, obviously this is a stock picking show, but there are plenty of gold miners that you can go and access as well. So for us, obviously what's happened overnight, it's just a reminder of the importance of also having a properly balanced portfolio and kind of selecting your asset classes correctly. And I think having a little bit of gold in a portfolio works well. Obviously, you can buy it through the JSE Central Order Book, and that's actually what made me think about it, because we emptied the JSE Central Order Book this morning in terms of Kruger rands. So you can actually go and buy the physical. And of course, you've got all the ETFs and all of that. But if you are concerned and you're looking for a good hedge, we've seen gold now becoming, on central bank balance sheets, it's now displaced the euro. So it's dollar, now gold is the biggest holdings. And as we see potentially a de-dollarization and friction continuing in the US, I think there is still a little bit of a tailwind here. If you're looking for a company specifically, maybe having a look at something like Harmony, they have recently bought into copper assets as well. But if you look at our gold mining sector, ASICs of around $1,500 an ounce. We've got a gold price at $3,400 an ounce. That's an enormous amount of cash that these miners are generating at the moment. And if the gold price can maintain where it is, and we see these tensions continuing, there should be further upside.
All right, gents, thanks so much for joining us this afternoon, and I hope you have a fantastic long weekend. Thanks to my guest, Grant Grant Nader from Benguela Global Fund Managers and Gary Booysen from Rand Swiss. Do remember that Stockwatch pre-records on Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.